Good afternoon, guys. Andrew Schartenberg here, your mortgage engineer, with your daily rate report and home buyer tip of the day on this dreary Tuesday afternoon. It is Tuesday, January 18th, and yesterday the bond markets were closed. There were no mortgage rates for the Martin Luther King holiday, so we weren't doing a rate report yesterday, just as an FYI. Today, we're going to keep it short, sweet, and to the point. Conventional fixed rates, 30-year fixed rates, perfect scenarios are at 4.75, and FHA and VA government loans are going to be at 4.625. So we're about an eighth of a percentage point higher than we have been over the last couple of days, and but still right in the range that we've been seeing. This week, really, we do not have any economic data that's going to affect mortgage rates at all. Be looking for the stock markets to affect it. If you look at the 10-year Treasury note today, it's at 3.36%. The lowest we had gotten last week, later last week, was at about 3.27%. So we're still right in that range. And I expect rates, even though we still have a downward pressure on them, to kind of hold steady. And if we do see any declines, it's going to have to be more piling on of economic news, but we really don't have any of that this week. So, for the home buyer tip of the day, today I wanted to define the new perfect. Typically, the perfect scenario for a conventional loan has always been a 720 credit score and 20% down payment. The new perfect is going to be around still a 720 credit score, but it's a 30% down payment. This has been a recent change from Fannie Mae and Freddie Mac. Keep in mind, this is not affecting the government loans, only the conventional loans. And I speak of conventional loans, I'm talking about, again, the Fannie Mae and Freddie Mac. The reason being is that loan losses that have piled up for servicers and investors over the last couple of years on these conventional loans have really, caused them to see statistically that they really need to up the equity percentage that folks need out there for the perfect scenario. Typically, the old mantra had been, if you put 20% down, then that's about the loss that somebody could expect if they had to foreclose on your home and sell it. Now it's about 30%. And also, when a mortgage is insured, that's about the percentage that it's insured for. So it's really just being passed through to the customer. Keep in mind, we are using risk-based credit scoring these days. So 740 plus credit score will garner you the perfect scenario at still a 20% down payment level. So that's where we stand. Check back again tomorrow, and probably this week expect to see mortgage rates hold pretty steady. Any questions, you can always get me at andrew@otfunding.com. That's my email address. Again, andrew@otfunding.com. Stay dry out there.